Alright, so in this video we're going to be posting from the general journal to the ledger. Now before I get started here, it's important that you understand the process. First of all, we've talked about the shoebox before. So someone took the shoebox and then they recorded every single transaction in this, the general journal. This is just a record of transactions. The ledger is going to give us a view of where each of our accounts is at any point in time. So we're going to take our general journal and we're going to post that to our ledger. It's all going to make sense as we move through this step by step. Now the first thing we need to do when we're going to do our general ledger, first thing we're going to do is figure out which accounts are involved. Now we need to do our general ledger in a particular order, and the order that we're going to do it in is real, OE. Real OE. So that's revenue, expense, asset, liability, and owner's equity. Now we just need to go through our list and see which accounts are involved. Okay, so I'm just going to try to sort of make it clear here. So, okay, there's a bank account involved. That's an asset. There's a capital account involved. That's an owner's equity. There's an advertising account involved. Now the advertising is an expense. You can see here that advertising and bank. So it's an advertising expenditure. So advertising is an expenditure or expense. There's our bank account again, so we don't need to include that a second time. There's a revenue account, so that's going to exist here in our revenue. It's service revenue. Okay, coming back up here. I know I'm jumping back and forth here, guys. Okay, there's a drawings. Now remember, drawings is an negative owner's equity. So drawings gets its own account. Bank accounts receivable. Now accounts receivable, you're going to get money eventually, so it's going to be an asset. Accounts receivable. Now the name of it is, it's Bob. Okay, accounts receivable, Bob. Service revenue again. Furniture. Okay, furniture, we bought some furniture, so that's an asset. Sorry guys. So we bought some furniture, so that's an asset. But when we bought the furniture, we bought it on credit. So that accounts payable to something called Idea Furniture. Accounts payable, that's going to be a liability. Okay, nearly there. There's a bank, and then there's a loan to ABC Bank, so that's a liability, so it's a loan. And then finally, there's a motor vehicle that we bought at the end, so that's an asset. Those are all of the accounts that are included in this month of transactions. Obviously, a real business is going to have a lot more, or hopefully a lot more transactions than this. So if we count it up, we've got one revenue, one advertising account, 1, 2, 3, 4 asset accounts, 2 liability accounts, and 2 owner's equity accounts. Now I'm going to go to another page here. I'm going to write all of these down in my ledger in what's called a T ledger. Okay, it's going to take a little bit of time, so we'll sort of move through this pretty quick. Okay, so here's our second page here, and this is our list of accounts, and we need to write them in this order. So first account's going to be service revenue, and just make a few lines here for service revenue so we can do some stuff in that and rule it off. The next one is going to be expense account, advertising, and again make a few lines so you can do some work with that, rule it off. And we continue on with all of the accounts in the order in which they appear in our real OE. Okay, so I'm just going to keep doing that. Okay, so by the end of it, it should look something like this. This is called a T ledger. It's in a shape of a T. We've got service revenue, advertising, bank, accounts receivable, furniture, motor vehicle, keeps going like this, accounts payable, blah, 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 blah. Now we have to, what's called post. We have to post each of our general journal entries into our ledger. Okay, so let's go through each of our transactions one by one. The first one here, if you look at our general journal, was bank and capital. So bank got debited. So you go down to the bank account and you debit the bank account. I'm on the left-hand side because left-hand side is debits. You debit the bank account by $20,000. You check the date. It was on the 1st of July. Now, what was the matching transaction? Now, the matching transaction you can see was capital. So in the particulars here, we say that capital was the matching one. Now we can do, or we have to now go down to our capital account, which is all the way down the bottom here, and do like pretty much the opposite of that. So we need to say, okay, $20,000 got credited. You can see $20,000 got credited, and the matching account is bank. And that all happened on the 1st of the 7th. Now, each time you do these things, make sure that you are ticking them off. Because as soon as you miss one, you've stuffed the whole thing up. So don't be really careful. Make sure that you catch them all. Okay, so the next account here, if we look here, advertising, $100. Okay, and it was debited. And the matching transaction is bank. And it happened on the 5th of the 7th. And then we need to go, we'll tick that off, we need to go down to bank now, and we need to credit bank 100. $100. It happened on the 5th of the 7th, and the matching transaction is advertising. Oops, make sure you can see that. Okay. So hopefully that's making sense. Here you can see these two are linked. Advertising, $100, and the matching was bank. Bank, $100, and the matching was advertising. This is the key to double entry accounting. Okay, we can tick that off. The next one here was bank and service revenue for $2,000. So we go down to bank. The bank was debited. Oops, where's bank? Bank. The bank was debited $2,000. The date was the 7th of the 7th. And the matching thing was service revenue. And we need to go up to the top here and do the same for service revenue. So tick that off. Service revenue, we need to credit service revenue. The matching account was bank. And that all happened on the 7th of the 7th. Okay, so if you've got the idea, feel free to stop watching the video, I guess. I'm going to run through the next ones really quickly so you can get an idea here. Okay, so drawings. Drawings was debited by $1,000, so I can come right down to the bottom here. That happened on the date the 10th of the 7th, and the matching account was bank. So now I can go up to bank, and I can do the matching transaction. So it's $1,000 on the 10th of the 7th, and the matching account was drawings. Okay, I can tick them off. Okay, accounts receivable, Bob, $3,000. So $3,000. It happened on the 16th of the 7th, And the matching account, you can see here, accounts receivable Bob, service revenue. Okay, and then I have to go to service revenue and do the opposite. $3,000 on the 16th of the 7th, and that was the matching account, the accounts receivable Bob. And I can tick them off, they're done. Okay, furniture and accounts payable, $2,000. So furniture, $2,000. It happened on the 22nd of the 7th, and the matching account is accounts payable idea furniture, and then I go down to idea furniture and I do the opposite, $2,000, 22nd of the 7th, and the matching transaction is with furniture. And I can come back here and I can tick those two off. Tick, tick. A bank loan of $40,000. So bank went up. Oops, I keep doing that. Where is it? Bank. Bank went up by $40,000. And it was a loan from ABC. And the date was the 30th of the 7th. Okay, and the matching transaction for that, we go down to our loan account. Loan, it's a, you can see here, it's a credit. Matching account is bank, and that's on the 30th of the 7th. And tick them off. Last but not least, we've got motor vehicle and bank. Motor vehicle has gone up by $42,000. The matching transaction is bank, and it happened on the 31st of the 7th. And then we can go and look at that over here. Bank. Oh, didn't leave enough space for this one. That's okay. When we use computers for this stuff, obviously you'll just be able to insert a row. $42,000. The matching transaction was... And you also don't need to do what I've done. You can keep them on the same rows. And the matching transaction here was motor vehicle. Uh, 31st of the 7th. Okay, so just one last thing. As I was just saying then, you don't need to do what I've done here. In fact, don't do what I've done here. Keep them on the same lot. Like, use as little space as possible as you move along. Apart from that, what we've just done is post from the general journal, this, which is our record of transactions, and we've posted here to our general ledger, which shows us each thing that's happening in each account. You can see two things happened in service revenue. It went up by $5,000. You can see that advertising expense went up by $100. You can see a whole bunch of stuff happened on the debit side and on the credit side when it comes to bank. Again,